It is time now for the day's business news with Stephen Carroll. Hello, Stephen.
Hello, Catherine.
We're going to start off in Russia. Argentina trying to cash in on Moscow's ban on food product imports from Europe and other places.
Yeah, that's right. Those bans, of course, affecting producers in many other parts of the world. But Argentina's industry and agriculture ministers will be meeting officials in Moscow. Today, they're hoping to sign deals to sell their fruit, poultry, beef and dairy products to Russia. It's a potentially huge opportunity for the Argentinian economy, which is facing difficulties of its own after defaulting on its debts at the end of July. The head of Argentina's dairy industry body says it could represent a 20% boost in exports. That opportunity, though, of course, comes at the expense of producers here in Europe. On Monday, the European Union announced €125 million worth of aid for fruit and vegetable growers who've been hit by the Russian ban. Delano de Souza has the details.
Exceptional measures designed to cushion the impact of Russia's food import ban. The European Commission has pledged €125 million to fruit and vegetable growers. They say they're unfairly bearing the brunt of Europe's policies in Ukraine. The emergency steps are set to reduce the overall supply of perishable products.
The whole idea, if you've just got supply and demand, following the Russian restrictions, there's much more supply on the market. This is a measure aimed at reducing the level of supply so that the prices don't drop below or don't drop to crisis levels.
The aid is set to take immediate effect and will last until November. It's destined for growers of carrots, peppers, apples and pears, amongst other products. In 2013, the European Union exported €1.26 billion of fruit and $769 million worth of vegetables to Russia, taking the total to just over $2 billion. The new measures are an extension of a deal announced last week by the European Commission to pay peach and nectarine growers for 10% of their crop. Russia's food import ban is set to impact the economies of Lithuania and Poland the hardest. And while the embargo also covers the import of dairy, fish and meat products, those sectors haven't yet been helped. The European Commission says it will continue to monitor market developments and not hesitate to step in and aid other sectors heavily dependent on exports to Russia.
Of course, those measures in reaction to the EU and US sanctions on Russia, but those sanctions haven't stopped the Russian oil company Rosneft from drilling its first well in the Norwegian Arctic with the help of Norway's Statoil. Rosneft won a 20% stake in the Barents oil field earlier this year. Norway joined the EU in imposing tough measures against Rosneft and its boss, but this venture holds up because the sanctions apply only to future deals.
All right, but take us through what's happening on the markets now.
Well, it was good corporate news that gave Wall Street a bit of cheer in trading on Monday. All of the main markets finishing in the green, as you can see. The discount retailer Dollar General's shares jumped after it made a bid for rival Family Dollar. More on that story in a moment. The Dow Jones seeing the biggest gains, though, up almost 1.1%. Now, that positive lead helping things over in Asia today, as is hopes of progress in the Ukraine crisis. So reasonably positive across the Asian markets. In Japan, the Nikkei trading up, helped by a jump in shares of the airline Skymark. They were up almost 28% a little earlier on after news of a possible takeover by Air Asia. The Kospi in Seoul also seeing some gains.
Okay, time for some more of the day's companies news next. And Stephen, you're going to start us off with bad news for a bank.
Yeah, Standard Chartered is to pay yet another $300 million to New York's banking regulator to settle claims it failed to identify suspicious transactions. Reports in the Financial Times say the settlement could be announced as early as this week. The inquiry is a follow-up to a previous fine paid by the bank in 2012 for violating sanctions with Iran and other countries. Standard Chartered is accused of not improving its procedures since then. PricewaterhouseCoopers has agreed to pay a fine of $25 million for altering a report on a bank's activities. The consulting firm is accused of watering down an anti-money laundering report for Bank of Tokyo Mitsubishi. The settlement will also see PwC banned from doing consulting work for New York regulated banks for 2 years. And as we were just talking about, America's top discount retailer Dollar General has offered almost $9 billion to buy its rival Family Dollar. It's an attempt to trump a rival bid from Dollar Tree worth $8.5 billion. A merger with Dollar General would create an industry giant with annual sales of more than $28 billion.
Right, now finally, we've got some potentially worrying news for you if you're a fan of, well, I think it's one of France's favourite breakfast items, isn't it? Nutella.
Yes. If you're a fan of Nutella, you could be in for a rough couple of months. Bad weather in March in Turkey has affected the production of hazelnuts. Now, quite a large proportion of the world's hazelnuts come from Turkey. Each Nutella jar, as you may know if you're a fan, contains over 50 of those precious hazelnuts. Prices, though, have spiked by over 60% since April of this year. Ferrero, which makes Nutella, has actually bought one of a major supplier in Turkey, according to Bloomberg Businessweek, the Alton Group, in an effort to protect itself against any potential price increases. Because it, of course, uses 25% of the world's supply of hazelnuts. So it is a very sensitive topic for a very well-loved breakfast product.
That's unbelievable. A quarter of the world's hazelnuts.
Go into Nutella.
That's amazing. Thanks very much, Stephen Carroll. Back in about an hour's time with more business news for you here on Live from Paris.